welcome back to my channel. If you are thinking about the processes of lease to purchase or rent to own, well, stick around because today we're going to talk about all the myths, all the mysteries, and break this down for you so you can find out if this kind of program is best for you on your road to home ownership. My name is Dania, and I'm a realtor here in London, and I'm so excited today to be joined with Heather Hanson. She is a mortgage broker with Rock Capital Mortgages. She goes under the Mortgage Helper. She has been in the industry in some capacity over the past 17 years, also works in branding as well. So she is a great help to any realtor who's out there looking to have some support in the mortgage and just being able to work as a professional and making sure that you are visible. So welcome, Heather.
Thank you so much, Dania. I'm looking forward to having a chat with you and getting some information out to the public.
Yeah, so Heather, I'm so grateful for you because you have been so open and engaging with me as a realtor and wanting to be there for my clients. Today, we're going to be talking a little bit about that lease to purchase and that rent to own. And this is a conversation that I'm finding is coming up more and more often with homeowners or potential homeowners because of the prices of homes, the amount people have to save before they get into a home, and what that actually looks like for them. So I'm so happy to have you here with us today. Tell us a little bit about yourself.
Well, I've been, like you said, in and out of mortgages for years, working and promoting other mortgage agents, and it just wasn't the right time for me. But when it came down to an opportunity to start a career for myself and promote myself, I was in a good place and decided that the mortgage industry, out of all of the companies that I worked for, was definitely my comfort zone. I love helping people. I like making their dreams come true. I like working through things with people. And mortgages is a way that sometimes I can't work with you right now, but I can help work with you through a process to get you to the point where we can get you that home. So it's all about putting the client first, making sure people will be able to achieve their goals. Or sometimes it's just an understanding. People don't really know exactly how things work in the mortgage world. They're more apt to go to a bank because that's where they feel trusted, the bricks and mortar. The bank is out to sell a product and they're great, but it's about what they have available to you. Whereas a mortgage agent, whether it's myself or any mortgage agent, we work for the client. So we find out what the client needs, and then we find a lender and a product that fits the client.
And that's the thing I do appreciate. I mean, I appreciate all funding aspects when they can help my clients and get them to where they need to go. But I find it's so nice when you have a client who doesn't have a relationship with a banker and a past history with them to understand I can just go there and get the money, and we know exactly where we stand financially. It's good to have somebody who can pull their credit once and put that out to a variety of type of lenders to find out what's best suited for that client to help them get what they need. And I think that's one thing that people don't understand is that bankers are not, brokers are not subpar to a banker. They just have a different type of structure where they can actually access more lenders than a traditional bank.
And we can also get you a better rate than any bank. There's actually a story many years ago when I first started working in this business that somebody came to the broker I was working with and said, oh, one of those big brick mortar banks has offered me, just for easy math, we'll say 4%. At the time, that was a fairly good number. And the broker said, well, we do billions of dollars of business as a corporate, and so therefore we get better rates. So I'm actually going to give you, and like I said, just for easy numbers, 3%, let's say. And so they went back to their bank and said, I can get this percentage. Why wouldn't you have given me that in the first place? And of course, the bank met them there. But why do you need to go and negotiate with the bank? If they really want your business, why won't they give you the best rate? Whereas we get privilege rates because of the amount of business that we do. And
right.
So I purposely looked for a brokerage that was considered one of the top 3 in Canada and that had access to over 56 lenders. So when you actually come and work with me, I'm actually looking at 56 different lenders and finding out which one is the right fit rather than you going to one place with one deal.
That's awesome. Well, Heather, you branded yourself as the Mortgage Helper. How did you land on that name for yourself?
Actually, it's pretty funny. I originally started out with just my name in my domain. And then I thought, well, it doesn't really explain to people what I do or who I am or what I'm trying to accomplish.
Yeah.
And I was actually on the phone with the company I bought the domain from, and I'm just throwing names out there. I'm Googling things, and the Mortgage Helper didn't come up. And it said in Google, there was things like, helping with your mortgage or something relevant to that, but not the mortgage helper. So I said, oh, well, let's just do that. And I didn't think really through it more than the fact that if I was Googling something and I wanted help with a mortgage, I would use those terms.
And now we're going to talk a little bit about this whole process of lease to purchase or rent to own. So this is a program where people in their understanding might think I can rent a home and pay a little bit more money. And then after a certain amount of time, I can buy that home. And there's certain things terminologies that people throw around, and that's like first right to purchase or rent to purchase. Can you tell us the difference between rent to purchase and the first right of refusal to purchase?
So the first right of refusal would be that you're already in a place and you're renting it, and the person wants to turn around and sell that house. And they would then, in the contract that you signed when you first started to rent, they would give you the option to purchase it before they listed it for sale. So really, I don't hear that happening an awful lot now. That was probably something fairly popular back years ago when people didn't really know how to populate options, or, somebody would move into a house. Oh, I love this house. I'd love to be able to buy it. They'd be like, okay, well, if I ever sell, right? So nowadays people aren't really doing that because they know that the house values are huge at the end of the day, and they don't want to commit to an amount, 10 years beforehand.
Right.
The thing with rent to own is there's a huge stigma attached. And that stigma is that people are getting ripped off. And let's be honest, I'm a victim of a bad rent to own 10 years ago. And it was one of the reasons that my whole goal when I became a mortgage agent was to make sure I found a program. If it existed, I would find it. That is a positive experience. It's in the best interest of the client. And the client is going to have the opportunity to actually gain the equity out of the home. And that's the biggest key when rent to own is quite often the investors want the money of the upgrades that you do. Well, you put your sweat and tears into that upgrade, and it was your money to make that upgrade. You deserve to have the outcome from that, not the investor. So I actually found a company that I very much like. Now, there is another company I'm looking at as well, but right now I just work with one. And the reason for that is not only do they give you the opportunity that any equity that you build in that home ends up being yours at the end of the day, but they also do credit counseling with the clients. So I always work with my clients, especially the ones that are in the rent to owns. I've done a few now. And it's really a neat thing to hear. Oh, I was just speaking with, the person that's in charge of the credit counseling, and this is what we've decided to do. And they're always on the same page. So then they share with me what their accomplishments are. The company I work with will only take on a client that I bring to them if they are going to qualify for a mortgage at the end of the day.
Right. I think that brings us to some of our other questions because, there's a lot of people who, let's face it, rent is atrocious right now, right? We're in Ontario, Canada right now. And, our housing prices have just skyrocketed since COVID. And in London, where I'm situated, they have been growing astronomically for some years now. And so we have people who are literally choosing between renting and trying to find somewhere they can buy because it's sometimes cheaper to purchase than it is to rent a home. When you have renting a home for a family, say 3 bedrooms, and you're looking at $2,400-$2,500 plus and utilities on top of that, it can be very costly when you could get a mortgage for, $1,500 to $2,000 and having that equity coming back into your own pocket and still paying out the utilities at the end of the day, right?
Right.
So I think that's that. But there's some myths that people have around that because I get a lot of requests for I'm looking for somewhere I can rent to purchase. I'm looking for that because they may have had some bad experiences with their credit and they think just a few years might fix that, or they think they can just pay a little bit more and in a year buy that house. Tell us some of the myths that you hear, and then what is the actual to those myths?
A lot of people think they can go into a rent to own. Now, again, I consider it a legitimate rent to own, right? It's done in a corporate level. It's done with investors. It's done with a realtor. It's done with lawyers. This is a real rent to own. And you cannot go into a rent to home without some skin in the game. You have to have some money. So a lot of people that come to me will be like, oh, I have no money. And, I make government assistance and I want a $900,000 home. Well, I'm really sorry, but that's not going to happen today. But why don't we take a look at what we can do and get you maybe into a home in 2-3 years from now? And that may be a rent to own in 2 or 3 years from now. But right now, you don't qualify for the programs. In saying that, there is a lot of areas in our province that have assistance for down payments. They would not qualify for a rent to own with those assistance payments, but I recommend, and we'll send the links to people and say, here's the link, see if you can qualify for the down payment the government's willing to give you, and then let's take another look. So I'm always looking at big options. One of the main things is I want to find if I can get the mortgage first. I always go mortgage first. The rent to own, as awesome as it can be, it is only a fit for certain people. And it is only a fit for if I can't get a mortgage. And how that qualifies is if your credit isn't so great. A lot of people think they can't buy a house because their credit isn't very good. Well, it's not 100% true. I can do a mortgage with a B lender for as low as a 565 credit. Now, if you go to bricks and mortar, you're 680. Okay, so that's where the misunderstanding comes from. Bricks and mortar, 680. Yes, you don't have 680, you're not getting a mortgage from them.
Yeah.
But B lenders know that things happen in life, and a B lender is not a bad thing to be. A B lender is just a company that's not a bricks and mortar.
Right. Right.
So it's not something you need to be afraid of. It's the fact that they understand, and you're going to pay a little more. Right. But yeah, I mean, back in the day, we paid 12% mortgages and 18% mortgages. So if you're going to pay 4% instead of 2%, I'm really not crying. You know,
right.
The reality is that at 4%, I can still get you a mortgage. So as long as you have 5% down, and if you don't, let's find a way to get that 5%.
So let me clarify that. Before you would go into a program with rent to own, you still need that full 5% down before you go into that agreement? Or is that something you're building over that time that you're rent to own? Because that's, I think, what most people assume.
So a 5% is to get a mortgage for yourself.
Okay.
That's all you need.
Yeah.
To rent to own for the company I work with, it's 3%.
Okay.
Or a minimum of 10,000.
Or a minimum of 10,000. Now, does that vary depending on the investor or the lender at the end of the day? Does that vary which percentage that is?
No, the down payment is 3% or a minimum of 10,000, which right now 3% is going to be the number because 10,000 isn't buying you a house, but yeah. It's 3% down payment. And that is you showing that you are, you have some skin in the game. Mm-hmm. And then the rent program is based on your income. Mm-hmm. Your credit score can be quite low. It can be somewhat tanked if you fit all the other criteria, because we're going to have 3 to 5 years that we're going to help build your credit up and give you the time to fix that. Or I have a client that had a large down payment, but their T1 general or their T4, the money that they claimed to the government was far lower than they actually earn. And so in the next 3 to 5 years, we're going to give them the opportunity to start slowly paying the government and doing their taxes. You know, it's great having your own business. You can do write-offs, but sometimes if you write off too much, it looks like you don't earn enough money, then you can't get a mortgage. So these are all little things that I'll work with you and make it so that, that person didn't want to wait any longer to get a house. So, and you can't just go from, 19,000 a year claim to $80,000 a year claim. You've got to do it gradually.
Yeah, or you're going to get flagged right away.
Oh, absolutely. So these are all things that we work with you. So in that case, I would look at your T1 general and say, okay, I can't get you a house because you don't earn enough money. And they're like, oh, I earn lots of money. Okay, but on paper, you do not earn enough money.
Right. And as a businessman, we're always trying to minimize our taxable income. So a lot of us do that. And yet sometimes we can harm ourselves because we're writing it down too far and then we can't qualify for credit.
Exactly. Yeah. And so that's one of the things that we're teaching people is, it's great that you want to, and I don't blame you for wanting to get around the tax man, but if you want to get the credit, if you want to get the money that you need to buy a house, you can't play that game. So we have to claim it. But over time, you can't just go from 19 to 80 without some red flags. So we have to do it over time. So this person, we had 2 choices for. She had a large down payment. Her credit was half decent. And she did have good money. So I could have gone the private lender route, where she would be paying maybe 7-8% interest for a short amount of time while we fix that tax situation, and then pop her into a regular mortgage afterwards. The reason we went the rent to own is because my conversation with her was about learning how to build your profile and your portfolio so that you could, at the end of the day, get that mortgage. Mm-hmm. And we felt that that was the better option for her.
Right. Right. So Heather, we know you need a decent amount of income on paper to support payment for a mortgage, but mortgage at all points comes down to a credit number at some point and your credit history. So you've clarified the fact that people that have a lower credit rating can still qualify for a mortgage or a rent to own, but we all know there are certain types of activities that may have happened on our credit that can impact borrowing. Is there some certain things that maybe on, say, a bankruptcy or a consumer proposal that may impact your ability to do a rent to purchase?
Not really. I mean, the ultimate thing is the rent to purchase or rent to own is all about fixing everything so that at the end of the time that you can get the regular mortgage. So
there's really hope for people who've been through some really awful circumstances that may be able to find themselves owning a home or in a home that they're going to eventually call their own, even though they have some of these things on their credit that really they're hard on people. They're stressful, they're embarrassing, they make people feel subpar so that they can't get any sort of lending. But you're saying there's hope for those people.
Absolutely. The biggest thing is what I have found is that people that end up going bankrupt or consumer proposal have spending habits that are hard to break. And it's no different from anything else that we do. We get into patterns, we get into comfort zones. It's why people fail on diets, because you get used to the way you want to eat. And then when you get a little stressed or whatever, you go back to that shepherd's pie or whatever the case may be, right? Whatever's the comfort food.
I like shepherd's pie.
Me too. It was just an example of something warm and comfortable, right?
Yeah.
And the one thing is that I think for me, the biggest challenge is people are not taught how to budget or how to spend money or what to do to spend money. And then they get all these programs where they're talking about snowballing. Well, when you've got multiple debts, snowball it, roll it over. Well, that's great in theory, but I have to tell you, Dania, it is the worst way to fix your credit.
Right.
The best way to fix your credit is pay everything down lower than 30% loan to value. That builds your credit so fast.
And I'm going to say, as a self-employed person, when you're getting started into a business and you've got a lot of overhead expenses trying to get going, that's very challenging, especially when you work in an industry like real estate where it's like this, right? You might get a lot of money up front, a lot of money right at the back at the end of the year, and you're still trying to work your way through the whole year. And so it is a challenge, but learning how to balance those things is important at the end of the day and understanding what your profit margins are.
Absolutely. So that's the one thing about the rent to own program that I work with is that we do credit counseling. So we teach you how to manage your money. I myself have had, I had a really bad rent to own situation happen one time, and that rent to own situation put me in a very bad financial position. I lost an entire house worth of money. And by doing that, it put me in a situation where I had to learn really quick how to recover. And luckily, my husband's always had a really great job. And so, and I've always been pretty handy at being able to get what I needed. So we learned how to recover very quickly and learned a lot of lessons from that. And what it did was it taught me that people don't know money.
Yeah. And I'm so grateful for you being completely transparent there, because people look at, realtors and mortgage people and lenders like they never have problems. They never, they've never experienced the challenges that people have. And I have to say, since coming into my industry, I have found more people that have struggled and overcome than I ever knew existed. And I think that's something for our audience to understand, is that you and I are just as vulnerable as somebody else. In fact, we don't have a regular paycheck coming in, so we're sometimes betting on the bank, or we could be, and that might turn really bad for us, and we might end up in a situation where it's really difficult for us, right? And knowing there's people like yourself or programs to do that. I would like to clarify one thing, because I think people are probably listening to this and saying, well, this is all great, and credit counseling's great, and we're talking about managing my money. If I'm going in a program like this with you, does this credit counseling cost additional funds when I'm doing this rent to own with you?
Absolutely not. One of the main things is for myself, and I know that it's maybe not a standard thing, but for myself, it is critical that I give every single one of my clients 100% of what my knowledge base is, so that I can get them to the point in their lives where they can turn around and say, wow, I didn't think I'd get here. I didn't think I'd make it here, right? Because they didn't have the skills. I mean, I really, at some point, would like to actually get into the schools and teach money to the schools and the kids in school, because one of the things my son came to me when he and his he just got married, and one of the things he said to me, Mom, I don't know how to budget. I don't know how this works. And I was completely transparent. I said, here's our bills, here's our income, here's what we have to pay, here's how it works. And he was like, wow, this is so helpful. Yeah. And we really need to teach people about this. We don't. And, it's just as important as cooking. It's just as important as laundry.
I agree with you. My parents didn't talk about money much ever. In fact, I think I love my parents. I'm just going to clarify that. But I think the thing we heard the most when we were growing up was, we don't have that money. We don't have that money. And we never knew that there was money. And so you just you actually become afraid of that whole piece, and being confident enough to handle that money and knowing that your money can work for you and you don't work for your money is really beneficial going forward as an adult.
And just to add on to that, my generation, your generation, I think we're the same generation. The scariest thing is when I talk to someone who's always dealt with the banks, the bricks and mortar, and I say to them, look, interest rates right now are ridiculous. They're handing money over for nothing. If you take the money out of your home right now, and we take that money and we put it into an investment of anything, even some of those banks are paying you interest rates bigger than what you're paying for your house. Stop hoarding your money in a house. We were raised in the thought of pay your house off, pay your house off, pay your house off. And that's great when you're paying 12%. But when you're paying under 2% interest, take that money out of your house, put it absolutely anywhere, everywhere. I will hook you up with investors. I will hook you up with whomever we need to do. I will even tell you what banks will save you the money that you will make double. And there's no risk putting it into a bank account, and you make double what you're paying on your mortgage.
Well,
and our generation doesn't
really
know
interesting conversation. Yeah, we don't understand that. In fact, these are conversations my husband and I have been really diving into lately, and because I think we come from that risk and losing, and both my husband and I came from broken marriages, so you go backwards when you get divorced, right? And then you're trying to rebuild. And I think that the last thing you want to think about is, oh my gosh, if we take this money and put it somewhere and it doesn't work, we're even that much further behind, right? Retirement's that much further out for us, and our pocketbooks are less than we would have planned for them to be. But I think finding a financial person who can work with that is a good thing, right?
The ultimate thing is, when I say to people, why don't you pull the money from your house? They're like, well, where would we go? We'd have to buy some. No, you don't move you from your house. You're just taking the equity. Yes.
Yeah.
And it seems to be a block for a huge amount of people.
Yeah.
We can do so many things. I had somebody who wants to do a renovation on their house, and they're looking at a construction loan. And I said, that's going to be huge interest. Just pull the money from your house, do what you want with it, and then pay the mortgage. At the end of the day, you can do a variable. And I always say to people, get the variable. It's the cheapest way to borrow money. And after you make your first payment, you can lock it in. So,
right. So Heather,
no risk.
Let's just try and I know we're trying to cover a lot of stuff today, and this is great conversation. I'm sure there's lots of people that will benefit from that, but I really want to make sure that we're holding the people that were here to talk about the rent to purchase pieces. So we've talked about the fact that you need to have, at the end of the day, you'll be able to qualify for a mortgage, that you give them credit counseling along the way, that you get to keep the equity from the upgrades that you put into your home when you buy that. And I think I want to stop there for a second, and I would love for you to break down that piece. So when you qualify, so somebody comes to you, you qualify them, they can get a mortgage, you've got something in place, you've got a plan in place, you're going to the investor. What does that look like for them? What kind of a house can they buy? How do they know what they're allowed to get and what they're not allowed to get? And how do you find out what their limit is going to be?
So exactly what you said. The first thing I do is I try to qualify them for a regular mortgage for themselves. And then, whatever that stopping point is, I then assess and decide, okay, we can't get you a mortgage directly, but everything here qualifies you for the rent to own program. Are you interested in going that route? It means you get in your house now, and then you get to own it in 3 to 5 years. So the people that say yes to that, the next part of the process is I actually have an application that they need to fill in for the rent to own company that I'm affiliated with. And then I've already pre-qualified them. So now what they need to do is I send all the paperwork over with the permission and the signatures. And now they work directly with the rent-to-own company that will then assess all the paperwork I've sent. And I've already got an idea of what they qualify for, but now it's not my spot anymore. And then they're going to tell them, you qualify for a $550,000 mortgage. And now they'll let me know as well, and I'll get in touch with the realtor that the person's been working with. Or if the person isn't working with a realtor, I will find a realtor in that neighborhood for them, because I have, lots of relationships.
I'm sure you do.
So then, I would call you up and say, hey, Dan, the client that you sent to me, I can't qualify them for a mortgage right now, but we're going to do a rent to own, and here's their budget. Okay. And then you go with them and you find them a home for that value. And the person then, the offer goes in. Now, here's where the difference is. The offer does not go in under the client's name. The offer goes in under the investor's name. Okay.
Right.
So if you find a home for that client, then you need to let us know. You let me know. And I make sure that we get the right name of the investor that is going to put the offer into the home.
At what point, so you're making an agreement with the investor, and the client is shopping, right? The home buyer is shopping. And what agreement and how legal has it been made before that between the investor and the client, the home buyer? What agreement has already been set in place?
So that application I mentioned that has to be signed for the rent-to-own company has all the legal requirements of how the system works. So for an example, your client, Joe, has come to me. I can't get him the mortgage because, maybe he doesn't have the 5% down payment. He only has 3% down payment. So that's fine. We move him into the rent to own. And then we find out the amount that rent to own is going to be. You go and find the house for them. The investor buys the house with the subcontract that states that person is going to be buying that house. They're going to pay, and again, we'll just pick some easy numbers. They're going to pay $1,500 a month in rent, and they're going to pay $600 a month in down payment towards their home.
Out of the 1,500 or in addition to?
In addition to.
Okay.
So it's going to be closer to the amount that you would pay for rent anywhere else at this point when you put the two numbers together.
Okay.
I'm going a little bit low.
So you're not necessarily paying an astronomical amount over market rent.
No.
Okay.
No.
I think that's where people get tripped up. They're like, well, I can hardly afford a $2,500 home rent now. I'm never going to be able to afford adding another $400 or $500 on top of that.
So what we do is, because we're budgeting you, we know how much money this house is going to be. We know how much it's going to carry for the investor. We know how much you can afford to pay in total. Right. And it gets broken down to make sure the rent portion covers the mortgage for the investor and the taxes and those expenses. And then we make sure that is within your budget. We're not going to put you into a situation that is not going to be a win for you, because at the end of the day, the investor is not interested in your home. They don't want your house. They're just doing this as an investment, right? So now there is the fact that every home has historically 5 to 7% every year. Houses go up historically. On average, this past couple of years has been stupid numbers, but historically 5 to 7 is the real number when you do an overtime. Yeah. So we'll use 6% as the number. So if you buy your house for 500, add 6% next year, it'll be 500 plus 6%. Then the following year, it's going to be another 6%, and it's going to be up 6% every year until you purchase that house.
Now, what price are you paying? So you're purchasing a home. Say the investors purchased the home today for $550,000. You have an agreement to rent to own over the next 3 years. Prices in the area are creeping at 5 to 6% every year. What price is the client or the homeowner actually going to pay at the end of the day? They will pay so 550 was your example, plus 6% each year. Okay, regardless of the increase, the market increase. So for an example, those people that got into a rent to own before COVID were winners, because they have guaranteed that they're paying for that house at that amount of a 6% increase, but the houses went up 40% or 13% or whatever number they went up, depending on where you live. I mean, where I live, they went up 32%. So that person gets that equity. The investor only gets that 6% that was guaranteed from day one. That's the signed legal document. The investor is the one who actually took a chance, and in this case, lost. Okay, so say that again. I think I missed something there, Michael. The investor is guaranteed that you will buy your home. If you buy it in it 1 year, you're going to pay it 6%. If you buy it in the next year, it's 6% plus 6%, and every year it's 6%. Yes. We do deals 2 to 5 years are our average deals. Okay. So whatever the math is for 6%, and then 6% the next year. So somebody that bought right before COVID in my neighborhood at 30% increase in value of a home, that investor actually lost, because that investor is only getting the 6%, not the 30. Okay, so let's just turn the tables a bit. I mean, everyone's talking about what the heck's going to happen in our market. Is it going to stay this crazy market? Is it going to level off? Is it going to dive? Or home price is going to tank? What happens if somebody purchases on a rent to own right now, goes into a contract, and in 3 years, housing prices are actually less than they are today? So in that case, I would say stay with your rent to own for another year or two and wait. And that's an option you'll have. It's not a hard stop. No, it's not a hard stop either way. So the investor knows there's a 2 to 5 year window. Now, if you
go 5 years and at 3 years you win the lottery and you want to pay it out, then you're going to have to pay the amount that the bank charges the investor to break that mortgage.
Okay, because they're making the mortgage based on your agreement.
Right.
The term of their mortgage is based on what you agree up front. So it's not just like, well, I want another year, or we're going to go 5 years, and if you break it early, no big deal. Because and maybe some people that are in these type of programs aren't quite aware that when you have a 5-year term on your mortgage, so you've agreed to have a certain rate for 5 years, and you break that early, your bank is going to have a penalty for you that you have to pay out because you've agreed to pay them a certain amount of money over that time.
Correct.
So you would be responsible the same as any other person who's breaking a mortgage.
Correct. And even if you're breaking a mortgage just to, like we talked about with the refinancing, if you're breaking your mortgage to sell your house, if you're breaking your mortgage to refinance, if you're breaking your mortgage to do anything, there's a fee and a penalty from the banks. Right. And you need to pay that. And then you need to pay a lawyer.
Now, I think that I just really want to get into some of the nitty gritties about this because my husband's a very inquisitive person and he's always looking at things from every angle. So I think that's taught me one thing is to ask a lot of questions. I just want to say, you have an investor. People have bad things happen to them. We've already discussed that you and I are not. We are just as vulnerable as anybody else of having things happen to us. What happens if you're in an agreement and you're doing fine, but your investor experiences some financial turmoil? What happens if that home or mortgage is at risk because the investor has had troubles?
So the investor, the only way that would affect the homeowner would be, number one, is if the mortgage wasn't being paid. So these investors are vetted by the rent-to-own company. So they're like, the rent-to-own company is like the middleman, right? There's going to be the investors, and the investor has usually their real estate agent, their mortgage agent, their lawyer, and the investor. There's a package of 4 people over there. And then I have my client, my realtor, my lawyer, well, the client's lawyer, right? And myself. So there's a package of 4 over here. So you've got these 2 packages of 4 that wouldn't come together if there wasn't a really great company that put them together. So the company that's in the middle that puts the 2 parties together will make sure that if there's any unforeseen anything from that side of the investor, they will put another investor in place.
So Heather, can you tell me a little bit about what it looks like if somebody is in the middle of a rent-to-own contract and they are not going to be able to fulfill that contract? What are the risks financially for them with the contract to not fulfill it?
So it's going to be no different than if you own a house and you're not going to be able to fulfill that. You're going to pay the fee, again, that the bank charges the investor for breaking that mortgage. And you're going to pay the legal fees for having to get out of that contract. And legal fees to break any sort of real estate mortgage of any sort is usually higher than the closing cost legal fees. So they run usually $2,500, $3,000. I've seen a lot bigger than that too. As a general rule, the rent-to-own program is going to already know that this is happening and will work out an exit strategy because of the credit counseling, the contact me. You're going to be talking to me. You're going to know if something's happening. I had somebody who thought they were going to get divorced during one of the rent-to-own.
Yeah, anything can happen, right?
Anything can happen. And we were fortunate. We were able to work through things and we were able to get somebody, looked after in that way. But you're going to be in contact. It's not like, okay, we're going to put you in a rent-to-own and you're on your own. It's let's see what we can do to make this be the least amount of damage possible.
Yeah. So I think one thing for people to understand is once you get this and you're in there, you're communicating and you are working through as a project, as a team. You will have a team with you walking you through this process. It's not just get it and we'll talk to you in 3 years.
Correct. We have to make sure that at the end of the day, the client wins. The client is successful. We don't work with people we don't feel will have success. So if you're somebody who's, not dedicated, that's why we insist on down payments. If you're dedicated to getting into a home, then we will dedicate our time and our energy to make you successful.
Okay. Now, I just want to talk about the fact people have been listening to us. They're like, I like this. This fits me. This sounds like something I could do and still get into a home that I love. What are the ways that people can actually vet a mortgage broker to understand they're in a safe place? What are the questions they want to ask?
Well, I always tell everybody, look, I'm going to give everybody 15-minute free consultation. And I feel that everyone is worth at least that 15, 20 minutes of my time. I don't care who you are. I don't care what your financial situation is. I don't care if you're not even going to buy a house, but you have questions. I'm completely open to having that conversation. And I think there's a lot of mortgage people who won't give anyone the time of day because of the fact that they don't have, it's the same. There's realtors out there that won't let somebody look at a house because they don't think they drive the right car. You're not like that, but there are a lot of them out there. And so you just have to find the person that you feel good talking to, someone you feel that you can have that conversation. People's reaction, usually I get, oh, wow, you made me feel so much better. I was terrified of this conversation and you answered all my questions. You didn't make me feel judged. I'm not the judge in this world. I just have information that you may not have. And I'm willing to share that information with you.
Exactly. It's funny, a little while ago, I was sharing with somebody who's having some financial troubles. And, I said to them, getting some help, and there's lots of free resources out there. I mean, we're talking about not being able to just go and purchase a home. So there's obviously going to have been some roadblocks in there, whatever those roadblocks are. If they're credit pieces, spending issues, past credit pieces, what can you do? And I think there's lots of free resources that we can find. And I'll put those in the description below so people can actually access those with you. But understanding that when you go to professional help for your finances, it is no different than you finding out that there's something that's not right in your body and you going to the doctor to get help, because that doctor's trained in how to identify and to help you get on the road to wellness for that illness. The same as your car. You can't diagnose your car. You take it to the mechanic and they're the ones that can do that work for you. If you're struggling financially, this is a great place for you to go to somebody who works with money all the time and can show you a bigger, better picture to help you. And it's not about failure. It's just about making it work right.
And one mortgage person that I was, we went to a big golf tournament, and one of them said, oh, well, why do you do that? Why do you spend time? If they're not going to, I don't get paid. And let's also hit that too, because that's a question I get asked all the time. Do I pay you? No, you don't. The bank pays me. The lender pays me. You do not have to pay me. Okay.
I was going to ask that question. So thank you for taking that.
You know what? I mean, now there is one exception. If I have to go with private, okay, I have to go to a private mortgage, I do charge a fee, because I don't get paid by the lender in that case. But anything else, any other time, and that the private mortgage is a whole separate conversation, so we won't go there. Yeah. But it's the reality is the lender pays me a finder's fee for finding them a new client. So don't worry about having to pay me. If I don't do your mortgage, I don't get paid. That's still okay, because you as a human being deserve the time and the commitment of another human being to give the knowledge and the resources that we have available to us and help you. And, at the end of the day, if it doesn't come back around, so be it. Sometimes it does. Sometimes that person refers you because you gave them the respect that they deserve. Yeah. And in some cases, maybe they turn around and win the lottery, right? There's always the hope that I can help them and that I will end up getting paid. Let's be realistic. We all need to make money. But I'm not afraid to tell somebody that. No, I'm not going to get paid if I'm talking to you today, tomorrow, the next day, or whatever. Mm-hmm.
I think that's the one thing people need to understand is that they're so afraid of venturing down some of these creative solutions for home ownership and shelter. Like, shelter is one of the greatest needs that people have. And that's something I've identified in myself, is that I really want to help people with shelter. That's what they need. It's what they deserve, whether that is finding a lease for you or finding a rent to own, finding a home for you to buy, whatever that looks like for you, that's part of who and me and what I want to do. And mortgage brokers are the same. They're not just there to pump up the money and say denied or approved. They're there to walk you through a process. So I want to just, bring this back to, you've said that finding a mortgage broker that can help you in these things, like, will mortgage brokers on their websites or things like that, will they identify that they work with rent to owns? And does every mortgage broker work with a rent to own?
From my knowledge and experience, there's very, very few people that work with rent to own. Yeah. Some of them will work with people that are renting their home with the intent to sell. I'm not comfortable with that. Right. But, it's going to be their own comfort level. So if you want options, you need to find someone that is willing to go to the nth degree to find the solution for you as the client and go through all the options. I mean, I've worked with people who have come to me and had, there was really nothing I could do for them. I think when you're looking for a mortgage agent, what you need to do is no different than when you're looking for a real estate agent, or you're looking for an investment person, or even you're looking for a bank to do your banking in. Mm-hmm. You get to have the choice. People don't realize that they don't always get to have a choice. And a realtor is supposed to give 3 referrals for you to find your financing if you don't already have an option. And even if you have an option, the realtor's responsibility is to give you 3 more choices. Because what you should be doing is going out and finding someone you want to work with. It's not about the house anymore. It's not about the money. It's about who you want to work for you. You are the client, and you need to find someone that you like, that you can talk to, that you can relate to. I get people phoning me up after 4 months. I couldn't help them 4 months ago. I send them, I keep in touch.
Yeah.
And I had a lady phone me up, and she texted me actually. She's like, "Can I call you?" It was 10 o'clock at night. I'm like, "Yes, absolutely." And she called me to ask me what would happen if she and her husband separated. Right. And I thought, wow, like that's the relationship I created with this person, that she felt that she could call me or ask to call me at 10 o'clock at night to ask what the repercussions and how things would work out. I'm sorry, it was a sad situation, but the reality was she's not going to a bank to ask that question.
Right.
She's coming to me because I made her feel like she was important and her questions mattered. So find that person. Find the person. It doesn't have to be me. It has to be the person that makes you feel good. And finding the right realtor, finding the right mortgage person, finding the right lawyer, these will all make your transition to home ownership or rent to own or whatever the case may be so much more comfortable, because Dania has a job. And if she does her job really well, which I know she does, then your transition is comfortable. And she's going to not take you to houses that aren't the right fit for you. When you come to me, we're going to figure out what the right fit is. And then we're going to make sure that you're connected to all the other right people. And that's the key.
Yeah, it's very, very important that you feel valued and you feel that somebody has your back. And I think for me as a realtor, what advice I would give people who are looking for a mortgage broker or a banker is that they need to have someone, and I believe this should be a question that every person asks a mortgage broker: will you communicate with my realtor? Because it is so incredibly important for me to understand your financial position and what the limitations are, because what you understand the limitations are in, it may not be what we can understand them to be. And it's my job not to put you in a place that puts you in legal or financial problems. And so that is what I believe a question that every person should ask of a mortgage broker.
Absolutely. Because one of the things that I have found is that if I don't have communication with that realtor, then sometimes they show them a house that is outside their range, and the person falls in love with the house, then they want to buy it. And sometimes I can still make that happen, but I will actually say to them, yes, we can get you in that, but I don't feel in the long run that this is the best choice for you.
Yeah.
And I will say that because I don't want the person to fail. I want them to feel good and win in the end. And let's just clarify one thing though, Dania, when you say your financial position, by law, I cannot reveal anything about your portfolio as a client to me, but I can phone Dania up and say, hey, Dania, Joe just got in touch with me. Thank you for the referral. And, I've already asked Joe if I can speak to Dania. Of course, verbal permission that I can speak to Dania. And then I turn around and say, okay, so Dania, we're going to be looking at a 700 max. Okay. So if you can keep it around 650, it would be better. But I know sometimes you have to go a bit higher. Please don't go over 7. And then Joe is going to be really happy.
Yeah.
That's all I need to tell you. And you can do a fantastic job. And I'm not disclosing anything private, and I won't by law. No. I'm not going to risk my license over that.
Absolutely. But just that communication, the questions that I can have is, what is the absolute max, and what's the financial conditions like for mortgage, those conditions that have to be on there, because some of them are longer than other ones. Those are the questions that are very important for me to have. And it pays for me to ask you directly, because then I've heard it. I know, and it's not just, well, I think just 3, or maybe we don't need financing condition, and then we're in trouble, right? Yes. So I am a big one about that. I don't feel confident moving forward without that. So, okay. So we've talked about the whole the processes of it, the myths of it, qualifying for it, your credit. I just want to have one more thing before we start to wrap this up. And that is, in our society today, we have a lot of broken families. We have people that have to sell their homes, and they have to to divide up their lives. And it's such a sad situation. I've been in it myself. It's not a fun place to be, but can you help those people right out of the gate, or do those people need to have a little bit of a recovery time before they come to you?
No, I've helped people actually buy out their partner, and then helped the person that was bought out get refinanced for another home. So, sometimes we have to go to private in those situations, because a lot of the times damaged credit and such. But in these situations, private is the way to go. It's not my first choice. I always go, lend direct first and then private. But don't be afraid to ask the questions, because if you have someone who, and like I said, I chose a brokerage that had 56 lenders, right? So I chose a brokerage that I could actually have access to all the options. Now, not every brokerage has all those options. So, every mortgage person is an agent, but not all of them are brokers. So for an example, a broker is like a broker for real estate. They can build teams, they can have multiple people. I choose not to do that. I choose to just focus on my clients and have a brokerage as my backing and my team there for me. I can, if I can't think of an idea, I phone my team members. I'm like, hey guys, what do you think? What should I do? Should I do this or should I do this? And I have a lot of people for feedback and a lot of support. And so don't be afraid if there is a negative situation that happens in your life, or maybe it's a positive. We can probably find an option for you.
Yeah, I think that's the thing that people need to understand is they think it's just a cut and dry situation. You qualify or you don't qualify. And I think there's ways of talking things through to find out exactly what you can do and the limitations around those. And sometimes it does mean you need to wait. But for the most part, I think that when you worked hard, you're working hard and people can see that you're working hard and you've saved that money up front, then you can qualify for programs like this for the rent to own. So we want to make sure you don't need to have the stellar credit, but you do need to have a minimum of 3% or 10% down before you will qualify for this program.
For the program that I work with, yes.
That's right. So, there may be other programs that people have that you'll want to get, that you'll want to investigate, but for the program that you work and that we're talking about today, that's the parameters around that. So is there anything else that you would want to tell somebody that we have not covered?
I think one of the main things, and I'm really not bashing the banks, but I just, people really need to understand mortgage agents are licensed under the government of Ontario for us to be able to work for you. The banks hire people and train them to sell a product. And it's great. I'm not bashing here. It's great. But they do have the black and white that you were speaking of. There is this is what we have. This is what you have to do. This is the check marks and this is where you need to be. And that's great. But if you need a variety of options, if you need more variance, maybe you're not the cookie cutter person with the two T4s and, 3 dependents. You don't fit that cookie cutter. You need an agent, not a mortgage specialist at a bank. You need an agent. If you are a cookie cutter, great, go to the brick and mortar. They're going to look after you. But if you are anything else and you don't fit parameters or you don't have the check marks, don't be afraid to look for an agent. Call us. You can call us and interview us. See who you like, who you want to work with. We are just people doing a job, and you're either going to love or hate us or in between, or maybe you love me, but you don't like how I work, or whatever the case may be. Find your person. Yeah. And that's your person.
Yeah. Well, that's awesome, Heather. And people, I'm going to put all your contact information in the description below so that they can find you, and you'll have your website there, your phone number there. They can connect with you. But we all know, we've talked a lot about credit, and we talked a lot about how the fact that you connected with somebody that can help them get their credit into a better state. Can you give us 3 simple things that somebody who's looking at improving their credit can do today in order to start seeing it build and grow?
So the first thing is, get your credit utilization under 30%. That means if your credit card is $6,000, pay it down to $2,000 so that your credit utilization is 30%. At 30%, your credit will jump, and I've seen it jump 30 to 50 points in a matter of days. Wow. Just getting that credit utilization. So instead of paying one down and then the next one down, get them all to 30%. It makes a huge difference. The snowball effect is great for getting rid of debt. But if you're talking about building credit, it's a whole different conversation. You need to make sure that you're using credit cards properly. That means you put something on it, you pay it off. You get something on it, you pay it off. If you can't pay the whole thing off, get it under 30%. It's huge on the credit scores.
Okay, one more, like 2 more.
Don't use your credit card if you don't have the money in the bank. So if you are going to go grocery shopping for food and you want to spend 60, but you only have 30 in the bank, spend 30.
Okay. And one thing that people don't understand that I have learned for number 3 is what late payments can do to your credit and how long they can stay on there. Can you talk a little bit about that?
You can actually, well, what we see is how many times it's late. We actually see it. And there's like little red flags on each one that's late. So, and I can see back 3 to 4 years of your credit card payments, and it actually tells me how many times you were late. So if you were late 70 times, then, I'm going to know that.
You're probably not a good risk.
Well, it just means I'm going to be looking at a B lender instead of an A lender, right? So
Right.
it means you're going to pay a little more interest. Now, granted, if you're going to do all the other things to fix your credit, you're going to be paying less interest at your credit card. So paying a little more for your mortgage is not that terrible, considering we're only talking 2% compared to 20.
Yeah. Well, that's awesome, Heather. I just want to thank you for being here today. If you have found value out of this video and this conversation, please press the like button, subscribe to this channel, click the little bell. You'll be notified of new videos that come out like this, and leave us a comment below. And if you want to ask some more questions, I'm sure that Heather would love to answer those questions, and I can answer them as best as possible in the comments below. And connect with her if you are in Ontario and you would like to know more about her program. And as well for myself, if you are looking for a home here I'm in the London, Ontario area, southwestern Ontario. Love to connect with you. All my information is in the description below, or you can just push the little Zoom button in the banner of this channel and we can have a Zoom call right away. So thank you so much for being here today. I want to let you know that I love real estate and I love people, and we'll just see you next time.